All right, guys, welcome in. If you're new to investing, if you have never invested before, but you want to be someone who selects your own companies, I have a software that is absolutely phenomenal. I've been on it for a couple years. Why should you listen to me? Just another guy on the internet. Well, I've spent over 10 years at one of the largest brokerage firms in the world. You know, as I was stepping away from that role, I was licensed since 2014, and I also run a multi-strat hedge fund. So I have a little bit of experience with looking at portfolios, what to look for, different softwares that I've scoured the internet for that I come to like, and I only will promote and talk about things that I think are absolutely a value add. I want to speak about a software that is called PortfoliosLab. It's a way to ultimately screen, back test, and then plug in any stocks that you may like, whether individual or a basket of securities, and it will go ahead and actually spit back out what they think based on certain metrics. So Sharp, Calmar, there's certain ones that you have to pay for, Sortino, basically using things a fund manager would use on a screen to ultimately give you the portfolio weighting. So the percentages of how much you should take your money, put that percent into which individual security, and then you can go ahead and you could see how that may or may not have beat a benchmark like the S&P 500. So very, very interesting tool. And the cool part, and I should mention this, is most brokerage platforms are not charging for stocks nowadays. So it's a way, if you wanted to, of course, get an index fund. There's a lot out there that are cheap or, very, very minimal cost. This is a way to take advantage of investing on your own, controlling your funds. And if you're buying just equities on certain brokers, like if you're on like a Fidelity or a Schwab, any of those that don't have any transaction fees, you would effectively be paying no fees to create your own portfolio. So I'm going to show you something real quick. Hopefully you find this interesting. All right, welcome in. This is Craig with Structured Wealth. This is not financial advice. And this is a software that I do use. I wouldn't say it's the end all be all, but it's something I do leverage to screen further different securities who look at our portfolios. It's a very, very great tool. Huge shout out to the guys at PortfoliosLab and what they put together. If you are interested, spoiler alert up front, I have a monster discount code for this software that I don't even have. When I first got on, I pay full price, which is fine because I'm a big fan of the software. But what do you get from PortfoliosLab? So real quick, what was put together, why the software was created to help people understand their investments and really help screen further is how I use it. So there's a lot of different tools. There's pre-built portfolios. There's screeners for ETFs, exchange traded funds, fund screener, stock screener, and then there's a discussions board. You can go in here and converse with other people, different announcements. I know for sure that a lot of the enhancements that came from this platform where people were giving feedback and they were helping them update it as they go. So I love that. I love that about any company who's willing to have its members bring a lot of great value to it. But I want to show you real quick how I use this tool. Tons of great features. So there's portfolio analysis, performance, stock comparisons, all these different metrics for ratios. But let's just go into one of mine that I really like. This is my brokerage portfolio for a while, and I'm going to show you why I like this tool so much. So this was one of my smaller accounts. There's a lot of notes in here. You're going to get an insight into my brain. I don't look at Sharp ratio a lot. It's a risk-adjusted return metric, but a 5.32 Sharp ratio on a 5-year back test with a max drawdown of 32%. What does all that mean? It basically means extremely well-performing portfolio on a risk-adjusted return basis. So I back tested over a 5-year period. A back test is when you look at a basket of stocks like we have here. So this pie chart, think of these as a bunch of pizzas. The companies are the slices, and you are hoping that on a back test, you can understand, okay, what's the max this will ever probably fall in a given time frame. So over the past 5 years, we can see that the most it's ever gone down is 32%. It's just really powerful to kind of understand that going in. It can help you on your investment journey. So what I think is amazing about PortfoliosLab is you can put these stocks in. So these are stocks that I already liked pre-screened out of my list. And so you input them, and then the weight is actually automatically picked for you on the asset allocation, which is super, super valuable. And then if you want, you can go right to your broker and plug them in, especially if you have fractional shares, you can go ahead and plug them in. So what I'll do is I'll go in here and we'll start backtesting and how much better my portfolio work was to perform over the S&P. And obviously this absolutely destroyed it, 895.66 over 5 years. So absolutely crushed the S&P 500. Looks like that's the first to go back. Sometimes this will only go back to a certain amount based on the securities I selected. And that's because the back testing will and this is really on any platform, when you have a portfolio of a security that may have not been around for over 5 years, it will systematically kind of cut off the back test. But let's look at the year to date. So compared to S&P, it's up 33%. Compared to 1 month, it's up to alphaing about 4%. Again, absolutely phenomenal returns on this particular portfolio. So I'm not saying you plop this in and you automatically are going to pick what it spits out. There's a little bit more to it than that. I don't want to oversimplify. This portfolio can really help you if you want to be a stock picker and you don't want to pay any fees. This is an easy way to not pay anything on an expense ratio at all, where you're going to pick companies that you like, put them in, and it automatically puts their weightings together. And really all the work that you have to do is to put them into your portfolio at the percentages you're given, and you just plug it in. So they give you monthly returns. And then if you're looking across the board from a risk-adjusted performance rate, everything is ticking green all across the board. And I will make a separate video for all the great metrics, but as you can see, very, very high quartiles as far as all the different ratios. So Sharp, Sortino, Omega, Camar, Martin ratio, and then you have the individual per security. And I look at Sortino the most, and I'm going to show you why. Because Sortino is much, much more prevalent in the fund manager space than Sharp ratio. You're probably going to hear that more from your financial advisor. And the reason why is because it takes in consideration the downside risk and not the upside. In my view, don't care as much about measuring a standard deviation of what the upside may be when we want that to be exponential anyway. We want that to be as high as possible. So why should I care about the standard deviation or a formula that brings that in? Because it could actually put me in securities, in my view, that of course are risk adjusted, that are still going to get me a good return, hopefully, but it caps some of those ones that have also a good downside risk adjustment, but I want exponential growth. In essence, it makes it a little bit of a catch-22 as to why they included that on Sharp, where Sortino doesn't. For max drawdowns, this is another phenomenal feature in the PortfoliosLab software. So it's going to show you that the S&P in my portfolio have just about the same. I actually think I beat it. Well, maybe a little tad more, 32%. So 1% off of the max drawdown over 5 years. But in essence, I'm seeing that blue, right in line with. So basically what this is telling me that I'm getting about 1% more on the downside risk, but 800% more over 5 years. Basically, as we saw when we go back up. So that's the trade-off you want to look for and you want to get. As you can see, over the 5-year period, this is almost over 8x the S&P 500. So that's really just phenomenal performance. And then again, one of the biggest things I look at, and this is right around my threshold, worst max drawdown. So from the peak to trough, so the highest point of this portfolio to where the lowest point it fell and how long it took to recover. This is again something I love that they put in. Only 44 days is phenomenal. I mean, these are very short recovery periods, whereas the S&P can generally take a lot longer, especially if you're going to back test into the 70s. This is huge beneficial tool if you're just getting into portfolio construction. If you're managing your own portfolio, it's a great way to DIY. And again, I think I'll go back to, you're not going to pay any fees. This is very inexpensive software. If you're interested, check the code below. The guys who put this software together, absolutely amazing people, and it just keeps getting better. And I'll make more detailed videos on this software in the future, but hopefully this is helpful, and I appreciate you watching. So smile and stay dialed.